All right, so get this. Today we're looking at whether you can actually make money off of other people's investing mistakes.
Yeah, it sounds kind of crazy, right? But it's not about like taking advantage. It's more about how, like human errors can create these weird opportunities in the market.
And the errors, we're talking typos, like when you're trying to buy Tesla, but accidentally type in TLSA instead of TSLA.
Exactly. And so researchers have actually studied this effect between big famous companies and then the smaller ones with similar tickers.
So they're trying to figure out if the price of the big one, like Tesla, can actually predict what will happen to that smaller, mistyped one.
Exactly. They looked at U.S. companies from May 2019 to March 2024 and focused on the long term, like what happens over a few months.
So not like day trading or anything, right? Just those big trends.
Right.
Thank you for tuning in to Quantopian's Quant Radio, your AI-driven podcast exploring everything related to quantitative finance. If you enjoy this episode, don't forget to like and subscribe to stay updated on future releases. For more quant-focused content, join us at community.quantopian.com. There you can explore a wealth of resources, connect with fellow quants, engage in insightful discussions, and enhance your skills through our extensive range of online courses. Quant Radio is intended to help people develop their knowledge and skills in quant finance. This podcast is not intended to provide investment advice. And now, back to the episode.
They figured that if a well-known stock, say Tesla, goes up a lot, then maybe that smaller stock with the easy-to-mess-up ticker, like TSLA Life Sciences, might also go up.
Like a ripple effect from people buying the wrong thing by accident.
Yeah.
Sounds pretty wild. So what did they find?
Well, hold on. First, let me tell you about what they looked at. They found 8 pairs of these stocks with confusing tickers.
Okay, like what? I'm already kind of worried about my typing skills.
Well, there's Tesla, TSLA, and TSLA Life Sciences, TLSA, of course. Then there's Ford, that's F, and Forward Industries, F4D. And then there's Zoom, ZM, and Zoom Info Technologies, ZI, easy to mix up, especially if you're in a hurry.
Yeah, for sure. So how'd they actually test this whole thing? Just sit around and wait for people to make typos?
They had these portfolios, long-only portfolios where you just buy and hold, and then long-short where you buy some and short sell others.
Wait, can you remind me what short selling is again? It's a little more complicated than just buying a stock, right?
Yeah, it is. Short selling means you think the stock is going to go down. You borrow shares, sell them at the current price, and then buy them back later when hopefully they're cheaper. You make money on the difference.
So kind of riskier, right?
Yeah, a bit. But they wanted to see if doing both, the buying and short selling, could make more money based on this whole typo thing.
Interesting. So they had these different approaches, and on top of that, they were messing around with weighting strategies. So like how much money they put into each stock.
Exactly. They tried 2 ways, proportional and fixed. With proportional, it changes how much you invest in each stock based on how many stocks fit their criteria at the time.
So if only 2 stocks look like good buys based on the big company, they'd get more of the investment.
Right, but with fixed weighting, every stock gets the same amount, so like 1/8 of the portfolio in this case. So it's more like you're spreading your bets evenly.
Gotcha. So 2 ways to build the portfolios, both to test if you can make money from typos.
Yeah, and the results are really something.
All right, what happened? What kind of results did they get with these portfolios?
Well, the long-only ones, where they were just buying and holding, those were kind of all over the place. Sometimes good, sometimes not so much.
Okay, so just buying the typo stock based on the big company, that wasn't a guaranteed win.
Yeah.
Not that surprising, I guess.
Yeah, but here's the crazy part. The long-short portfolios, specifically the ones with that fixed weighting, they actually beat the market consistently.
Wait, hold on. You're saying they made more money than if they just put it all in, like, the S&P 500?
Right.
All because of these typos?
That's what it looks like, yeah. And it was consistent, especially over the long term. That's what makes this so interesting.
Wow. So the takeaway here isn't like becoming some kind of typo trader, right? It's more about how these little mistakes can have a real effect on the market.
Yeah, exactly. It goes against that whole idea that markets are totally rational and efficient. People mess up, and it actually changes things.
Makes you wonder what other weird patterns are out there just based on how people act.
Right. That's what's so cool about the market's always something new to figure out.
For sure. But before we go crazy thinking about getting rich off typos, got to remember that this was just one study.
Right.
What are some things we should keep in mind?
Definitely. We can't just assume this applies to every stock out there. They picked 8 pairs that were really easy to mix up, might not work the same way with other companies.
And this was just from like 2019 to 2024. Who knows what would happen during, like, the whole meme stock thing or a big crash?
Totally. Good questions for more research, for sure. It would be interesting to see what happens as more trading is done by computers, too.
Oh, yeah. With algorithms and stuff, those typos could get amplified, right? Could really mess things up.
Totally. People, technology, and markets, it's all connected. And we're just starting to understand how it all works together.
Well, this has definitely given us a lot to think about. Even if we don't all become typo traders, it shows that those ticker symbols are more important than we think.
And maybe more importantly, it's a good reminder to slow down, double-check everything, and realize that even small mistakes can have big consequences.
Well said. So, for anyone listening right now, let's say they're not a day trader or anything, what advice would you give them based on this research?
Easy. Always double-check those ticker symbols before you buy or sell anything. Sounds obvious, but this study shows even pros make typos. And, think a bit more about what makes the market move. It's not always just about, like, company performance. It's also how people act and the mistakes they make.
Yeah, being aware of that is probably a good tool for navigating the markets.
Yeah.
Okay, before we wrap up, I want to know how they measured this whole lead lag thing. Walk me through it.
Sure. So they took those 8 stock pairs and looked at their price history month by month. Let's say they were looking at Tesla and TSLA Life Sciences over 3 months.
So at the end of each month, they'd see how Tesla did over the last 3 months.
Yep. And then they'd check TSLA Life Sciences over the same time. If Tesla went up a lot, you'd kind of expect TSLA to go up too, right?
And if Tesla went down, the opposite.
Exactly. And remember, with those long-short portfolios, they were both buying and short-selling, depending on what the bigger company was doing. So Tesla up, buy TSLA, Tesla down, short-sell TSLA.
Gotcha. So they did this every month with every pair just following that pattern.
Right. And they made money doing it, especially with that fixed weight. And so there's definitely something real going on with these typos.
It's wild when you think about it, huh? Just a quick typo, and it creates opportunities for the people who know what's up.
Shows you that even with all the fancy computers and stuff, people still matter.
Well said. Now, I know we talked a lot about Tesla and TSLA, but what about those other pairs? Any of those stand out to you?
The Ford one with Ford, F, and Forward Industries, FRRD, you'd think people wouldn't mess that up, right? Ford's a big company.
Yeah. Everyone knows how to spell Ford.
But people make mistakes, especially when they're busy or distracted. And the study found a link there, so it's happening, even with obvious tickers.
So it's not just about, like, tiny companies or really similar tickers. Even Ford can get caught up in this. What else is interesting?
The Apple and Advanced Auto Parts one was kind of weird, too. Apple, AAPL, and Advanced Auto Parts, AAP. Totally different companies, right? Tech and then auto parts. But the tickers are almost the same.
Yeah, just that one L makes all the difference, and it sounds like people were making that mistake.
Yeah, the study shows a link between them. Apple's price seemed to affect Advanced Auto Parts. Maybe not as much as some of the others, but still.
So even if the companies are totally different, those typos still matter. Got to be careful typing those tickers.
Definitely. Makes you wonder how much this is happening with other companies, ones that weren't even in the study.
Yeah, like a whole secret world of investors messing up.
Yeah.
What about the Zoom one? Zoom, ZM, and Zoom Info Technologies, ZI. That one's got to be relevant, right? With all the video calls and stuff.
Oh, yeah, especially during the pandemic. Zoom was huge then. Stock price went way up. I bet tons of people bought Zoom Info thinking it was Zoom.
Yeah, makes sense. And the data kind of proves it.
Big time. Strong connection between them. People are definitely confused.
So this typo trading thing, it's not just a theory, right? It actually happened with all sorts of companies.
Yep. And this study just gives us a peek at it, There's so much more to learn about how people act in the markets.
It's crazy to think about.
Yeah.
All right, one last question for you. We've talked a lot about human behavior. What are some of the things that make people make these mistakes with ticker symbols?
Good question. Could be a bunch of things. One is like confirmation bias. That's when you only pay attention to stuff that agrees with what you already think.
So if someone already likes Tesla, they might not even look closely at the ticker because they think they're right.
Exactly. They're not looking for problems. Then there's anchoring bias. You get stuck on the first thing you see, even if it's wrong.
So they see a headline about Tesla, go to buy it, and just focus on that name Tesla without really checking the ticker.
Yeah, exactly. And then there's just plain old FOMO, fear of missing out. Everyone's talking about this stock. It's going up. Gotta buy it now. Don't even look at the detail.
Yeah, it's like our brains just try to take shortcuts, especially when we're excited or scared. And sometimes that leads to messing up.
Exactly. Even the best investors have these biases. Gotta be aware of them if you want to avoid the mistakes.
Good advice. for investing and for life in general, right?
Yeah.
All right. I think we've learned a lot today. Any last thoughts?
Slow down, double check, and remember that your brain can play tricks on you. The markets are complicated, but the more you understand how people act and how technology fits in, the better decisions you can make.
Well said. Thanks for joining us. This has been a really interesting look at how typos, psychology, and the market are all connected.
Happy to be here. Always fun to talk about this stuff.
And for everyone listening, always, always double check those ticker symbols. And hey, maybe there's another typo opportunity out there just waiting to be found. But be careful. Do your research. Until next time, happy investing.